Hello and welcome to the Stock Planner channel. Tonight I'd like to talk about some undervalued stocks in the basic materials sector. I don't usually play that, and I'll take a look at a new stock and see how it shapes up. I'd like to remind you that the Stock Planner channel is an education channel where we like to share our ideas, do some peer review, improve our skills, do our own due diligence, and win. We're swing traders trying to capture the tops and bottoms of the market. A lot of people say that's a fool's game. Our trades last from anywhere from 2 to 5 days or can extend into 2 and 3 months. Lately, I've been trading those extended periods because of the volatility of the market and the fact that I think October still is going to be a downer. Our government is having problems solving problems. We have China situation and Evergrande and the shipping problem and the energy problem over there. Our supply chain is broken here in America. We still have COVID, and we have the immigration problem. So I think that October is still going to be a downer, and so I'm going to play it very safe. But we'll take a look at basic materials, looking for undervalued and growing stocks. Undervalued and growing stocks during a recession and inflation. Undervalued and growing stocks. Let's get started. Taking a look at FinBiz and looking at Friday's performance. And it looked like it was going to be a good morning, and then the afternoon kind of went south. Let's take a look at that. Pretty good in the morning, and then just steadily went down south. All three indices went down, and some of the big boys, Google seemed to do okay, in Facebook, but all the other big boys, Amazon, Tulsa, not looking so good. It's a mixed day though. And then looking at the groups, energy performed well, and I'll probably take a look at that Monday, that sector. Basic materials is up there. And that's what we're going to look at tonight. And this is for the 1 day performance. And this is for the week. Basic materials number 3. Let's see where it is on the month. I don't think it's going to do so good. Yeah, it's down a little lower. And it's down for the 3-month period. It's at the bottom. So it looks like there's a little rotation coming for basic materials. Maybe it's the infrastructure. They need some more materials for that. Maybe it's Tesla selling more cars because they have just had a good report, saying they were able to produce cars even in a down market. We're having some supply issues and some chip issues. Can't get the chips needed to control the cars. So we're going to look at basic materials. I use a tool called Simply Wall Street. It's not free. It has you can set some of this stuff. I mean, you can actually do this and do a set a screener up, and some things you can do free. You can analyze up to 5 stocks a month. But we're looking for some large stocks that are undervalued, that have some growth, and we want to be in the materials sector. And based on these criteria, on the criteria I used, I came up with 5 stocks. Vulcan Materials, and it's in a lot of communities, as is in our community. Ground Holdings are the 2 that I'm familiar with. We're going to talk about RPM International, which manufactures and markets and sells specialty chemicals for industrial and consumer markets, but all 5 of these are undervalued and growing. This is a snowflake, and it shows that the future looks pretty bright in the health of the company, and it pays a dividend. Likewise, RPM is a dividend stock. Health is pretty healthy, and it has some future growth, and it has some past history. The object is to get the snowflake that's green, and you want to fill up as much area as you can, and this one's got a lot of fill in, and I've never traded RPM International. We're going to look at that one. Vulcan, which is on my watch list, is a little less green, as you can see. Still green, and so is Crown. And this is probably a new company because it doesn't have much past growth, or just became profitable. Let's look at RPM. It's trading at 33% below the estimate of fair value. Earnings are forecast to grow 15%, and they have grown in the past 13%. Pays a dividend of 2%. Not bad. Debt. You have a lot of debt. Usually these companies have a lot of debt anyway. These are the competitors in their areas: Sherwin-Williams, PPG, I'm not familiar with this company, and Quaker Chemical. None of those 4 are on my list. We're going to look at TradingView and its price history, but look, is it low, high, low, and maybe it's coming back around. We don't know. Soft first quarter. This company was founded in 1947, has 15,000 employees. CEO is Frank Sullivan. Never heard of him. One of the things I like about Simply Wall Street is they have this graphic. I can understand this. Even though I went to Penn State, I was a computer guy, not a financial guy. So my edge lies in being able to scan for changes in the market. And I can write programs to do that. As far as understanding the financial sheets, the balance sheets, leave that to Warren Buffett. But I do understand a little bit. Here's your future growth. There is a line that's going up. We want to see that. That's great. And the past performance, same thing. Growing, undervalued and growing. This is on the weekly. So each bar represents a week worth of data. And we like to, as a swing trader, we like to capture these swings. And if we could do that, I wish I could, reliably, we'd make lots of money. This is being a downward slide for any number of weeks. Looks like about 15 weeks. Downward 20 to 25 weeks. If you predict it, even at 20%, you miss it by 20% and get the 20-80 rule and could get that. That's a large amount of money. This is a zigzag indicator. It's part of one of the indicators I use on TradingView. And if you like my setup here, you can go to the link below, and I have my setup. This is the MACD, and it's pointing up. The stochastic RSI coming down the bend. We like that when it crosses over the 20. That's a sign that let's buy. And likewise, this is the 30. This is a sign to buy. It's about ready to cross. I haven't done this it's in my head right at the moment, but this sure looks like it's thinking about going up. And the zigzag at the moment for the last 2 weeks does not know what it's doing. And when it doesn't know what it's doing, that's when I like to take action. Because up to this point, it knew what it was doing. So when the zigzag doesn't know, it means, hey, it's waiting for more data to be perfect. Right now, it doesn't have that data, so we have to analyze it, make that decision. So the decision is, this might go up. And let's see, do we think that's around the support? We can just draw an imaginary line here. Yeah, that looks like about it. And that support became resistance here. Okay, and so we're going to see if we can find something that's 2 to 3 months out. And we want it to kind of predict that we think it's going to go up to 90, or at least 50% of this, which is just think it's about 90. That's one of our things, 90. And we don't want it to go 70, 90. That's 7 or 8 or 9%. So we're looking for something that will stay above 80 or 79 for the next 3 months. And if it does, somewhere in there, we win some money. This is a $79 stock. That's $80 stock. And if you have a $10,000 account, you only just trade about 1,000 or 1,200. So that'll give you about 12 shares if you buy the stock. And you'll have to spend about $1,200. Let's see if we can get into this trade for around 500. And if it goes $10, 80 to 90, $10 on 10 or 12 shares, that's $120. So if we buy the shares, let's see if we can do better with an option. So this is a free simulation tool. It's called OptionStrat, and it lets you do a lot of different strategies. Now we want to go up, and so that's going to be a sell and a put right there, or a bull put spread. This is an $80 stock. I don't want to tie up $80,000, $8,000. So I'm going to do a bull put spread, tie up less money. And we want to be 2 or 3 months out. Let's say December. And we want to be in the stock February, 75, 80, above 77, 78. And that is definitely above 79. That meets our goal. This is $500, and you'll get $225. If you hold it to February, it'll get $225. But if it goes to about 8%, you can take profit along this line anywhere at any time. And that's what I hope to do. I hope to go up in the next month or so and take an early profit somewhere around here. So I hope to make $100 on 500. And what's that? 20%. And likewise, here's your stop loss at 73 and 85. Target 85 and stop loss at 73. So I just look to you to make 20% or $225 on a $500 investment. That's almost a 1-for-1. I mean, this looked pretty good to me. Let's go back to TradingView. So if it stays above 78, we have a winner. Our target price is 85. That's doable. 85. It's a little lower than that one. and 73 is our stop loss. Well, I like this trade if we believe that Basic Materials is going to do well in the next 2 to 3 months. Are you investing in undervalued growing stocks? What do you think of this trade? Leave your comments below. Please like and subscribe to this video. We'll catch you on the flip. Happy trading. RPM, Basic Materials, growing undervalued stock. Seems like a good stock in an inflation recession. Catch you on the flip.